Welcome back to the table for the Friday, November 29, 2024 Market Plus. We're still going. Ernie Goss, Chris Robinson here, and we've been talking here, Ernie, between tapings. I got a list of things. I need to go back. I cut him off. You can't we let him have the final word.
You know, he's smarter than me, so it's probably a smart thing to do.
Well, I should have let you say goodnight. Let's start with our first question that came in. Dan in Nebraska, and he says, are pork prices going on a huge bull run?
Absolutely, have been just in the last 5 months. I mean, we've had a lot of volatility in 2024. The weights continue to drop. The demand continues to be very, very strong. The prices are at or near contract highs. You're getting up to this 90-cent level, 92-cent level. You know, I'd love to see if we can get lean hogs back up to the buck. But in general, it's been a great recovery. But it was a very, very difficult year. We had a big slam for the first 6 months. It didn't look so good. Looked like we might drop below 70 cents, 68 cents. So to see us back up here at 90, 92 is a great opportunity. If you follow me or if you're paying attention at all, I'm always a big believer in protecting that revenue because it can go away so quickly. And rather than try and look at your crystal ball and say how much longer is going to stay here, I would say protect as much of that revenue gain as you can. But certainly, this has been the year where every time you sold a pot load, if you bought some of them back, you did very, very well.
This isn't necessarily a crystal ball question. It's more of a monitor crystal ball question, Chris. Boyce in North Dakota. I see that managed money and the total non-commercials are now net long corn.
Yeah.
So how much more upside potential does this market have since they're already on that side of the boat?
It's the one thing they're long. They're long corn and they're long the protein complex. They've got a record long lean hogs. In fact, it was kind of funny. We had a little bit of a blip last week in lean hogs, and it was about 2 days after a person that is noted for being a stock analyst said that he was friendly protein and friendly Smithfield. Literally, that was almost the top for the lean hog. So everybody that wants to own hogs in the financial community owns it. It's a small position that they've got in the corn, like 100,000 contracts, 120,000 contracts. I'd be more impressed if it was 200, 300, 400,000. But it's a start. But I would say this, and I've talked with other brokers and other producers about this. Why are they long? Why these guys are not stupid people. They're short beans, they're short everything else, but they're long corn. And I think that I'd like to see how this plays out. Maybe there's something going on that the market sees that we don't is not evident yet. So I'm a big believer in paying attention to the managed money. It is a force of nature.
Well, not necessarily managed money, but the markets. Dr. Goss, how would you think if this stock market hits 50,000 at Christmas? What would that mean? We're already, Dow hit a record 44.7. Looks like Tuesday we were headed to a close at 45. 50 is not out of the realm of possibility by Christmas. What's that mean?
That investors have lost their mind. I mean, not really, but
it's only 10 more percent.
That's right, but
11, right? I think is what your math said this morning,
but
Chris.
The price earnings ratios are out of sight, meaning for every dollar of earnings, you're paying excessive amounts for the stock, and that's not a good thing. I mean, in other words, what's happening is the ETFs, exchange traded funds, individuals are pouring money in there, which automatically goes in the market. And we don't. There's no buying based upon the price of the stock and the earnings relative to the stock. That's one factor. Also, where are you putting your money? And investors, in my judgment, are overly enthusiastic. I mean, there's a price to be paid. I don't know when it happens, but what would I be looking at? I'd keep an eye on the 10-year Treasury. The yield on the 10-year Treasury, as I've said on your show before, what that does is tell you about what investors globally see about inflation. So that's my...
Were those the investor pirates you were referring to? Who's that?
The vigilantes.
The vigilantes.
Vigilantes, the bond investors.
So what does that, I mean, what does that tell us, though, in making sense of this? Because to me, a 50,000 Dow makes no sense, like you said.
Right.
That seems, it's not a measure of the full economy.
No.
but it doesn't even seem like it's a part of the reality right now.
The global economy, and investors just are they're I don't know what is sleepwalking. I mean, in other words, and you've got the magnificent or fantastic 7, 8, 9, whatever you wish to call it. Those are growing back to like the income distribution. 80-20 is the same in this. A lot of it's the same in the stock market. You've got the Russell 2000, Russell 5000. Not so much there. Growth in the Facebook, Google. Now, in that respect, you're going to see a Trump administration that comes in and deregulates some of that. I mean, Google has been taking on the chin from the Biden administration's Department of Justice and the other regulators, and I think that's some good news to come out going forward. Is we're going to see some deregulation.
One quick thing about everybody wants to in the stock market, except for Warren Buffett. Warren Buffett has the largest cash position he's had for a long time, so he's waiting for something, and we're overdue. We've had multiple 10%, 20% corrections. You know, the last big correction we had was COVID. We dropped 32%, 35%, boom, boom. So it's lingering out there. A lot of people have lost a lot of money trying to time that correction. Right. When it comes, it's going to come. It's probably going to be an opportunity or that we don't see, and it's going to be very difficult to tell somebody, hey, we just dropped 30%. Now's when you want to buy it. Human nature being what it is, everybody, I think I saw a statistic where the most money's come in since the election, again, into these ETFs, and you just have people that were waiting. Now they're all getting in. And but I think if you come back full circle, the United States is still the best place to be. Absolutely. It's still, you know, don't bet against the United States.
Why the dollar's rising.
But
one of the reasons.
It is overvalued, but there's that old expression, right? The market can remain irrational longer than you can remain liquid.
That's right. And what about baby boomers that say, well, if it turns down, you'll get time. Well, how much time does a baby boomer have to recover? The downturn in 2008 and 9, it took several years to get back. Well, do you have the time when you have to take RMDs, required minimum distributions? Also, you need money to live on. Yeah. So there are some real issues out there.
Do you have any concern that any of we talked about no farm crisis forming, but do you see Great Recession clouds forming? I mean, housing's
still
high.
Again,
it's still overpriced.
It's like the stock market. It's overpriced. If you look at what it takes for a first-time home buyer, putting 10% down or 20% down, your payment in Iowa and the other states around Nebraska that we survey, the price is the per monthly payment is almost tripled since the pandemic I'm speaking of. Can you imagine that? Tripling of the monthly payment now with the interest rates. Now the mortgage rates are now back up to almost 7%. Now why is that? Inflation. I mean, there's inflation fears, I should say.
Right. Well, inflation hit inputs, Chris. Gary in Wisconsin wants to know, how would fertilizer tariffs on Canadian products affect grain prices? And you can also answer from higher inputs.
No, I don't think that if they try and pass those tariffs on for inputs, especially for stuff that does come in from Canada, it's definitely not going to be a positive thing for a producer here who has to buy that. There's no two ways about it. They can't slough it off. And it's real difficult to just pass that on to somebody when you're trapped because you've got your fixed input costs and what you produce, what you sell is at 4-year lows, right? And then you're worried, is it going to go any lower? Is it going to go higher? So I think it's something that, again, this is going to be a year where you're going to have to be very, very careful and know the levels that you need, especially if they do increase the price of inputs because of tariffs.
Crude has dropped back below 70. Diesel, you were talking about earlier.
Just at 3-year lows. I mean,
are you locking in anything right now?
We've tried
natural
to.
gas as well.
Everything's been come down depressed. You just saw crude oil. Crude oil, you know, if you look at a big picture, for the past 3 years, we've been in about a $30 trading range, $65 to $90, give or take. So when we get down here sub 70, that's an opportunity. You did mention diesel. I think about 6 weeks ago, two months ago, we were at 3-year lows. And with my marketing advice, I was just like, hey, we're at 3-year lows. If you know you use a lot of diesel, when it gets down there like that, that's when you want to maybe go fill your tanks up, as opposed to waiting if we do have, because we're always one headline away from gas prices spiking, then you've got a problem. So when the market gives you the opportunity, take advantage of it. And again, that is a silver lining for producers, the fact that gasoline is cheaper.
And yeah, gasoline is cheaper. I think
Yeah.
we're below $3
Yes.
national average. If President Trump comes in and says, I want to continue to drill and put more oil into this market, doesn't that further depress things?
It depresses the price, but that doesn't mean the economy. I mean, with cheaper energy prices, we're apt to see an expansion there. But one other factor is the LNG, liquefied natural gas. President Biden put a halt to new license to export. That's going to be some very good news, and it's apt to push up natural gas prices, which have now been very low. So the gains there, and back to the oil industry, they will still do quite well with these prices at 60, even below 60 perhaps. That's not going to be a big issue. I think it'll be good for the economy.
I could do this all day, but I just have one more thing I need to quickly ask you, and that's about the labor issue right now, because there is impact that could be on agriculture in areas. Do you see labor as a major challenge in 25?
Oh, absolutely, especially if we're not judicious about sending individuals back to their home nations. And we depend heavily on immigration. And I'll turn to I'm talking about legal immigration. When a person graduates from a college in this part of the country, whether that's junior college or universities, give them a green card at the same time. We need labor. Our birth rates are so low that we've got to get more labor in this, and that's really choking this part of the country, the economy.
You want to dive in on immigration before we go?
I think the risk is, and again, it would probably be passed on, but what happens if there's an issue with especially the meat processing plants? I'll just leave it at that.
Yep.
I think also if you go to California, that's a whole different labor
Absolutely.
issue, because that's a whole different, ball of wax. But I think that how it affects the Midwest, we're sitting here in the Midwest, certainly if they start getting aggressive, it could have an impact to probably not the demand for beef and pork, but it's going to impact the bottom line of those companies that are in that business.
Chris Robinson, so good to see you. Thank you so much for the time. Ernie Goss, thank you so much.
Good to be here.
Appreciate it. Happy
Great.
Thanksgiving to you both.
Happy Thanksgiving.
That is
Absolutely.
going to do it here for our Market Plus, and I want to remind everybody to get signed up for our new free newsletter at markettomarket.org. Next week, we'll keep tabs on the decision makers and connecting readers. We'll tell you that story, and we'll also have the commodity market analysis with Mark Gold. Thanks for joining us. Have a great week.